Macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen. Well, with the markets now reopened this last day of October, and having opened up between mixed to a little bit lower, it looks like maybe the sellers might be in control of what's going on here. Let's check in with our tactical trader, Kevin Cook, to see what the market looks like to him. Mr. Cook, what do you have for us?
So I want to revisit the charts we looked at last week where I used Bollinger Bands to look at volatility as this market just sort of sits on 1,400 waiting for a catalyst. You know, this is a support level to me, but the bulls would need a catalyst. And even if there's not something positive with earnings or data or Europe or China or Washington, it could even be that the selling is overdone and they take the market higher. Okay. But we had a new element thrown in here with the Superstorm Sandy. So let's just go to the charts and see what's happening. So again, the market's just sitting on 1,400. I've got the Bollinger Bands here. They are expanding. You know, this market could take a slide here. And I have the 100 and 200-day moving averages on here, not the 50-day. So that blue moving average is the 100-day on the S&P at around 1398. Let's take a look at the VIX here. Remember we talked last week about this indicator. VIX spikes above its upper Bollinger Band and then comes back down and closes below. That is being used as an indicator with, let's say, 60% accuracy to say that's a turn in the market, the market's going higher. Well, that's the situation we've got here where volatility is not expanding that much, except even though we've closed below that upper Bollinger Band, now what you have is a situation where the Bollinger Bands are expanding. So the volatility of volatility is expanding, and we've got a spike in the VIX here back up solidly above 18.
Okay, so I know that as we revisit these charts with these Bollinger Bands, you wanted to emphasize, make one or two points about the usefulness of these charts?
Oh, yeah. One thing I left out last week, and I put in the notes underneath the video, is that just because a market, say, a market selling off hits the lower Bollinger Band doesn't mean it's necessarily going to bounce there. What can happen is Bollinger Bands expand, and then they start to slope that direction. So you can have a market cascade down with its lower Bollinger Band into a strong sell-off, and you know, you're seeing that in sort of a just getting going phase here in the Russell 2000, where the market could continue to sell off, lower Bollinger Band slides down, and the market slides that slippery slope with it.
Okay.
So and let's look at Apple while we're on the topic. Apple back open after a ton of earnings estimate revisions of the downward variety, right? Like House is taking the December holiday quarter, which was supposed to be huge and record at close to $16 EPS. A lot of them taking that below $13. A 20% haircut for the December holiday quarter to Apple earnings was where the estimates are now. And this December holiday quarter is actually the first quarter of the fiscal year. So looking out for the whole year, analysts are taking down the consensus from over $53, close to $54, to the last time I looked yesterday, the Zacks consensus was 51, but a lot of houses are down to $47 for the year. So big haircut in estimates, and you're seeing that pain. A lot of it's built in though, so you're still not seeing a dramatic drop in Apple, bouncing off the 200-day moving average here around 590.
Okay. Well, you and I were talking about that technical market legend Ralph Acampora, and his big fear-driven sell-off after the superstorm call.
Yeah, he was quoted last night saying he thought that we'd have a big market sell-off this morning. Yeah.
So, what do you think? Is that going to happen?
Because it hasn't unfolded yet. It certainly could. And he looked at it as this would be a great buying opportunity. He's one of these guys, and I tend to agree with him that you get to these points where you want sort of the last capitulation sell-off and flush lower, get all the weak hands out, and then the market turns over and the strong hands come in. Let me show you another perspective on this. This is Marty Chenard at stocktiming.com, and here is his chart measuring institutional buying and selling. Whether the big players are in accumulation mode or distribution mode. And clearly you can see through September, late September and into October, they've been in distribution. if you go to his site, stocktiming.com, he also has some supplemental charts below this where he thinks that we could be reaching a turn here where this is slowing down. So you've got institutional selling dominating, but if that starts to slow down, institutional buying picks up. That's what he's looking for in his data for a turn here. So he sees some divergence in some of the data he looks at. And I think we're close to that point. Like with Apple, I think Apple could have a capitulation down to $570. All the weak hands are out, and bigger buyers step in and say, okay, Apple's probably going to make close to $50 this year. It's a value there. It's almost a value stock. And with the broader market, sure, a trip down to 1380 on the S&P wouldn't surprise me at all. Then we've broken into this band of support. I have 1390 as sort of my line in the sand, but down to 60 should be a strong band of support for the whole market.
Okay, that's the latest from our tactical trader, Kevin Cook. Follow him on Zacks.com. He has his own little column space there, Cook's Kitchen. Also, you can interact with him on Zacks Real-Time Insight. That might even be of more interest to you because you can join the conversation with Kevin on Zacks Real-Time Insight. Check it out, Zacks.com. With Kevin Cook, I'm Terry Ruffalo.